lost their own brother. People can't even walk the streets because they'll never know in the world they're gonna meet. Cause that need, oh, need makes great almighty dollar. Got money. People will laugh, they will cheat. People don't care who they heard of me. A woman will say.
Please note that World HD posts on social media may include statements concerning financial market trends and are based on current market conditions, which will fluctuate and may be superseded by subsequent market event. The investment strategies and broad themes discussed in World HD live streams, recordings, and social media posts may be unsuitable for certain investors depending on their specific investment objectives and financial situation. Information and data contained in posts and on live streams have been obtained from sources believed and checked to be reliable, but not guaranteed. You should note that the materials on the social media platforms are provided as is without any express or implied warranties. Past performance is not a guarantee of future results. All investments involve a degree of risk, including the risk of loss. Any comments made in the materials are opinions with no guarantee that any expressed course of events will actually transpire, and no compensation has been paid to any person providing a testimonial or comments.
Oh, say, can you see by the dawn's early light was so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight. Oh, the ramparts we walked were so gallantly streaming, and the rockets regular amongst birds singing out, yeah, through the night that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free and the home of the brave.
World HD streams live on Rumble X and YouTube every weekday morning, 8 a.m. Eastern Time, or maybe a couple minutes later in some cases. And in today's case, Good Friday morning, December 6th, 2025. I think we got that date right, December 5th, 2025. I can't figure it. Today I know is Friday, but I'm not sure the date. Okay, we got it. All right. Today is Commodity Friday. We'll look at a little bit on commodities. And if you guys have any charts, I wanted to throw that out there today. If you have any charts, any ideas of anything you want to look at, we'll take a look at it today. Otherwise, I think I'll go through. I want to look at soybeans. We haven't looked at that in a while. That's a good confirmation of what Bessent was talking about yesterday. Treasury Secretary Bessent was talking about, and China's living up to its agreements, right? So we'll see that in soybeans because we'll see the pull through. Are they buying our soybeans? So far, they haven't bought that much, but they are buying. And you can see it in soybeans. They're holding up fairly well. So we'll take a look at that chart today. I think we need to take a look at the stocks. Yesterday, we had the Russell 2000. We've been talking about this, I don't know, for a month or two. Somewhere the money needs to go. So when things get really, really overvalued in the in the technology, right? We see this technology space it's carried the load for 2 or 3 years in the stock market, right? It's been the one that's really done the pulling. 7 or 8 stocks have done the majority of the pulling on the NASDAQ index, on the S&P index, and even the Dow index to some extent. Although we saw the Dow lagging until recently, and then it broke out and it's sort of doing its own job of leadership. But the Russell 2000 hit an all-time high yesterday. And the chart still looks like it has a ton of, this thing could go for quite some time. So when money gets in places that are overvalued, I've been thinking about it in two ways, I guess. Here's the way I've been thinking about it. When money gets into places that are stretched, it's going to look for some place that has a little more value, right? Even if they stay in some of the NVIDIAs and some of that kind of stuff, they're going to have to pull some of that out of there and move it someplace else where they find some perceived value. It could go overseas. Okay, we talked about how overweight it is in the U.S., right? The U.S. has like 30% of the global, maybe even more than that. I mean, it's a massive number. Like the U.S. is not only are we heavy on valuation, but we're heavy on the amount of equities that the world the world equity, the equity pie, right? The stock market pie of the world. The U.S. is a big chunk of it. I want to say it's like 30 to 40%, something like that. So you figure 350 million people in a world of 8 billion people, what's that like? I don't know, 20%? Is that not 20% of the population? 20% would be like 1.6 billion. So, what, even less than that, 5%? 400, so little at 4%, so 4 to 5% of the population. And yet our equity markets have 30 to 40% of the total valuation. We've talked about this, the baby boomers having $80 trillion worth of net worth. A lot of that's tied up in the stock market. Some of it probably starting to roll over into the bond market because of asset allocation. And we, I don't know if any of you remember, but there was a guy back in the, 10, 15, 20 years ago, Harry Dent. He used to do all these studies and books. He's got a ton of books out there on, what happens when the baby boomer population gets older and what happens to the dynamics of the country and, and we're going to get a crash and this and that and everything else. And look, I don't rule it out. We've talked about that many times. I can make a case for the Dow, maybe making a run up here to 50,000 and then, you could see. What's going to cause it? I don't know. Another COVID type of a false flag. Again, it's hard to predict those kinds of things because you could say, well, they're leading us to civil war right now. They're leading us to World War III. They're leading us to this. We talked a little bit about this yesterday. And I think, things can happen, right? And I can see technically where the Dow could come back to 15,000, 13 to 15,000. Okay. It's a crazy type of a prediction. And I don't know if it's a prediction, but it's just knowing where the range is. I think that's the biggest thing is knowing where the range is. And we're going to look at a clip today from Lloyd Blankfein from Golden Slacks. Okay. He was their CEO, president. I think he was both for, he hasn't been there for probably 3 or 4 years. But he was their risk manager for a long time. And I think it's an interesting perspective. So again, we looked at Michael Burry, right? His investing philosophy. We've looked at that Stan Druckenmiller again. Talked about him a little bit yesterday, but but again, it's interesting to look at these when we can hear their investment philosophy wrapped up in a nutshell like that. I think it's good. And then I've got another one I wanted to play. I lost it. I got to find it again. I thought I saved it, and then maybe it's not saved. Who knows? But it's on Soros, right? And as much as I think most of us despise Soros, it's a pretty good investment philosophy, right? It doesn't mean you have to like what he does, but it's good to understand how they did what they did, and because not every investment they did was nefarious, right? Some of them were actually good investments. Some of them were good investments. And so the concept is, how did they do that, right? How did they manage their way through that? And today we'll look at Lloyd Blankfein. Again, I despise Goldman Sachs, but nonetheless, he ran a successful risk desk there. And he did run it through 2008. So, that brings up all kinds of crazy questions. Did he know? I think he knew. I think he knew. I think he knew the real estate crisis was coming, and they made it look like they took a big hit so they could get the government backstop. And but nonetheless, I think it's good. We'll look at that, and Boy, where was I going with that? Now all of a sudden I get off so far talking about that stuff. But we'll circle back. We'll circle back. Oh boy, here we go. We'll take a look at Lloyd Blankfein today in that investment philosophy. And then, I know, money moving around, right? Money moving. Could it go overseas? Yes. With the way everything's so lopsided toward the U.S., you could see where money could move overseas. And some of it might, right? It might move into emerging markets. A lot of this depends on the dollar too, right? So this is why we watch these different things. If the dollar, I forget who it was. Someone had a great point last week when they said, well, but if the dollar goes up, doesn't that hurt our ability to export? Yes, it does. And you could see us kind of isolating off a little bit, the Golden Dome, tariffs and people buying our stuff. Could people buy our stuff? Will the tariffs even matter? There's so many things, and it's too hard to think too far out, I think. I believe it's too far to think that far out. And you just sort of, it's good to contemplate those things. And this is what that Lloyd Blankfein talks about. It's good to contemplate these things, right? Contingencies, what contingency plans, and having good. That's really what he says in this clip is having so many good contingency plans that when something arises, you're able to say, "Oh, okay, we get it. Let's do this." And it may not be exact, but it might be close. Okay, and so that's the thing. That's that clip. I think it's very valuable. Contingency plans. So as this money tries to find a new home, does it go to emerging markets? Maybe. Does it go to the Russell 2000 index? Okay. Again, why is that? If what Treasury Secretary Scott Bessent is saying is correct, and we watch that really tight clip of him sitting around in the cabinet meeting, around the table the other day, going through in 2.5 minutes everything that they've done to set the stage for 2026, and he talks about Main Street versus Wall Street. So if his word is true, okay, then it's going to show up in the Russell 2000 index because that's where the jobs are created, not at the large corporations, right? The large corporations are probably going to be engaging more AI and more technology, and they're not going to be doing as much hiring. The real hiring comes from small business, medium-sized business, the growth of the economy, the broadening out of the economy, reindustrialization, refortifying the U.S. in terms of a much more stable and potentially an isolationist. It's a little bit of an isolationist policy. If you can bring that back in here, you're not as dependent upon other countries. Okay, so a lot of things in the works right now. Clearly, a lot of things are changing. And this Russell 2000 is fascinating. So we'll definitely take a look at that chart today, too. All right, that's a long way of getting to say we'll definitely look at the soybeans. We'll look at the Russell 2000. Anything you guys want to look at, we can pull up. Well, maybe not anything. Maybe we have to limit to 3 or 4 symbols. So the first 3 or 4 that we see, we'll take a look at those. And then probably look at this dollar, although it's not that exciting. But I do think I hate to put dollar values on this, but if this dollar goes up, I mean, you're talking about this is a $50 trillion trade. I mean, this is a massive situation, so that's why it's so important. I mean, from a global perspective, global shifts and global money movement, maybe bigger than that, right? I mean, it's just a huge, huge situation. Whether the dollar falls apart or the dollar goes higher, ultimately it's going to fail, right? I think that's not a hard thing to see, that the dollar will ultimately fail. And it will be replaced by something else. The question is how. Does it fail on the upside? Does it fail on the downside? Does it fail just through, attrition over time? And it will take a while to unwind this dollar. So those are the key things today. Probably should look at, gold. We've got the apex of this triangle, even though it didn't work. It didn't work to create a situation for that potential sell-off into the 3,500 area or lower. It's still good to look at it and see how it's responding to this triangle. So I want to look at that too. So those are the 3 big things I want to look at, and then anything you guys want to look at too. Okay, so let's talk about some of this economic data. We have, here we go. I think I've got something up here for this. And I'm going to try to, hopefully this weekend, I can get a few of these things fixed and get back to doing it the other way, where I can have a little bit more control of the screens. Okay, so at 10 a.m. today, we get the September core PCE. Now, normally this would be a significant number because the Federal Reserve, again, we're going to talk about the Federal Reserve a little bit today too. This is the number that they like. Okay, it's a inflation measure, and it's their preferred inflation measurement, right? The PCE, personal consumption expenditures. Problem is, it's the September data. Okay, so this, this is that whole government shutdown thing still filtering through. Even though it's a big number, it's September's data. So it's not October's data. It's not November's data. So this is old data. And it's probably not going to have that much of an impact. And then we get this University of Michigan also out at 10. University of Michigan sentiment. There's another one that comes out from University of Michigan. But this thing is a very, a very, I don't know, I'd call it incredibly partisan number, and that's why I think I don't like it at all. It does move markets. The Federal Reserve does sometimes act upon University of Michigan sentiment. So, the highest economic, system of the world, I guess the Federal Reserve, or at least what has been, looks at this data point. And so does the market. The market will react to this number, even though I think we know that it was a fraudulent number years ago, and it's very partisan, incredibly partisan based. So again, I don't like it, but it is what it is. And so that's a number that can have an impact. And that's out at 10 o'clock today. And then at 3 o'clock today, Trump signs a series of executive orders. I don't know what's on the docket for that. I really have no idea. I just saw that is the case. And we're going to look at a couple clips of President Trump. One, let's go ahead and look at this one right now. Let's take a look at this one with him talking about fixing another conflict around the world. And these are all good signs. Every one of these conflicts that he solves is less division, right? It's less division in the world. And it gives the people the power that love wars, right? Because they can make a lot of money off them and they can exert will and control a lot of things. It takes the power out of their hands. So every one of these wars that he dissipates is really a very positive thing for the world.
We have come to the U.S. Institute of Peace to sign a historic agreement that will end one of the longest-running conflicts anywhere in the world, with far more than 10 million people killed. Today we commit to stopping decades of violence and bloodshed and to begin a new era of harmony and cooperation between the Democratic Republic of the Congo and Rwanda. I want to thank the two courageous leaders. They are courageous leaders. They really are courageous leaders, great people. President Tshisekedi of the Democratic Republic of the Congo and President Kagame of Rwanda. I have a lot of confidence in both leaders. We'll keep these commitments. I know they're going to keep them and follow through on the agreement and create a much brighter future for the people of their countries. Today, the United States is also signing our own bilateral agreements with the Congo and Rwanda that will unlock new opportunities for the United States to access critical minerals and provide economic benefits for everybody. And we'll be involved with sending some of our biggest and greatest companies over to the two countries. And we're going to take out some of the rare earth and take out some of the assets and pay, and everybody's going to make a lot of money.
Okay. All right. Let me get back to here. So again, two good things: dissipating war, dissipating conflict, dissipating division, and finding ways to get into rare earth metals and minerals. So again, bringing them along, finding ways to get them to participate in the global economy. It sounds great. I mean, this is the kind of stuff you really want to see. Okay. And here he is. I just want to run this one too. This is good to think about. Like, this is him. I don't know. This is, I even forget the guy's name. Dave. He was one of the talk show hosts. So many names in my head. But here he is talking about, Japan and how the world was ripping us off. And these are things we've seen so many times, but it doesn't hurt to reflect on this because you can see the consistency in what he's talking about for probably 40 years now. I mean, this has been 40 years.
Are people trying to draft you to run for president up in New Hampshire?
Well, I guess a lot of people want to see this country. It's a shame what's happening. Japan, Saudi Arabia, Kuwait, everybody's taking advantage of the United States. People know that if certain people are running a country, that it won't happen. I mean, when you look at Japan not paying for the defense, we're defending Japan. We're losing billions and billions of dollars. We're fighting for AIDS help and for farmers and for this and that. And it's a shame. And the Japanese folks, who I respect greatly, but they're not treating us fairly. They're really not treating us fairly. Kuwait, Saudi Arabia, they're not paying us anything for the services we're rendering, and I think it's a disgrace. And I think people look at certain people, and maybe me, if I were in a position, this country, believe me, would not be ripped off like it is, and it is just being ripped off so badly by our so-called allies.
Yeah. So that's a pretty strong statement. So now, are you
I don't
saying
think it's
that
strong. I think it's fair. And by the way, I have tremendous respect for the Japanese. I do a lot of business with the Japanese, and they smile about it too.
Okay, so Letterman. All right, I apologize for that, for forgetting that. Okay, so David Letterman, this has been, I mean, that looks like it's like late 80s, early 90s, something like that. So you're talking, 30 to 40 years of a time window where he's talking about that. And just look at the deal that he did with the Middle East. He went in there, got the United Arab Emirates, Qatar, the Saudis, Japan, all these, again, is the $21 trillion foreign direct investment number that we talked about yesterday that President Trump keeps throwing out there, is it accurate? Probably not. Okay. Is it 7 trillion? Is it 12 trillion? Is it 5 trillion? I don't know. It's still a lot. Okay. But the important thing out of this is that here he is saying that he would do that a long time ago, long before he ever made a run at president. Okay. Not that he didn't have maybe ideas that he might someday, but the point is, we see him getting them to invest in the U.S. Okay, just like he said, Japan's given $600 billion. The Saudis gave $600 billion, but then upped it to $1 trillion. And we looked at United Arab Emirates and Qatar pulling 1.2, 1.4. So again, this is when we see him doing this in Rwanda and Congo, or India and Pakistan, right, settling these wars down, or what we see going on in Venezuela. You can, and people are chewing that Venezuela thing up in many different ways. You can talk about the narcotics trafficking. You could talk about, the illegal voting stuff. I mean, there's a lot of different ways to go at this. Nonetheless, it needs resolved because, again, China, whatever that is, had a lot of influence in South America, and you need to break that up. Okay, you got to get back the Panama Canal. You can't lose these shipping channels. You can't lose access to your waterways. I mean, this is part of our hemisphere, I mean, Rubio's been talking about that as well. But you also have to stop this illegal voting thing, let people have fair votes. Again, back to Rwanda and Congo. You've got to and these people have been pounded, by the globalists. They've been extracted because there's no one to defend them. And here's President Trump sort of defending them, okay, in a roundabout way. All right. Okay, so I just wanted to run those two and try to connect those things. I think those are great, two great clips. Okay. And then let's see here. Back to the economic data. I think we're okay on the economic data. I don't want to spend too much time on that. We'll come back to that. Let's just go ahead and let's keep rolling here. I want to go to this clip here on this one is, what is this one? I've been doing a lot of research. Aaron Day did a great show. I wanted to say that for sure, too. Like last night, Aaron Day did a 3.5-hour show by himself. And I talked to him for an hour early in the middle of the day. And I was thinking to myself while we're talking, I'm like, he's got a show tonight and he'll go till midnight. The guy's a machine. And I'm thinking, like, he probably needs his time, but he just wanted to talk. He's got all this stuff going on. I mean, this guy's amazing, right? I mean, he's so smart and he's so driven. I mean, and he's so curious, I guess, more than driven. He's just so curious about these things. And, but he did a show last night on the healthcare tourism, medical tourism, which is a crazy concept. There's this stigma out there that the U.S. has the best medicine. And I think we've been brainwashed to believe this. And the reason we've been brainwashed to believe this is so that we're willing to pay whatever it is, and not even get an itemized list or a menu to choose from. It's like this system's so like crazy if you really think about it. You walk in, you tell the doctor, hey, this is my problem, or they already know, right? Whatever. And you don't really get to see a list of like what's going to be done, what it's going to cost, how much it's going to cost you, how much it's going to cost the insurance company. You're really not making the decision if you think about it. The decision really isn't yours, right? The decision's being made from some precedent being set, pushed down to the doctors. This is your protocol. This is what you have to do, and they have to be careful when they think outside the box because they're not going to get paid or they're potentially going to get in trouble. And so we've been brainwashed to think that the U.S. has the best medicine. And yet what Aaron's trying to point out is it's not the case. It still feels like, like it feels crazy to me that I'm going to go to I'm going to go to Thailand or I'm going to go to Singapore or something like that. And I'm going to go over there and just lay down on a gurney and let them do open heart surgery on me, I'm not sure, it just, you're outside your culture, you're outside your comfort level. I mean, the whole thing there's some really good ideas about it, but the whole thing feels a little sketchy to me in some ways too, because I have this brainwashing as part of me, right? Or I'm going to go to, if I needed teeth work done, it's going to cost me $15,000 in the U.S. Or if I'm going to go down to Mexico, it's going to cost me maybe, $3,000 or something like that. And you're like, yeah, but do I really want to go down there and have what if it comes? I mean, I'm not sure the Mexicans are known for great teeth, like the smiley, pearly white teeth, So you're like, anyway, I don't mean to pick on these things, but, you just have this stigma, But what he's saying is that it's really not like that, and the key is to get a lot of testimonials and build these websites and build an infrastructure of websites that you can actually see and get people. Because again, if you see someone who went through the process, they went over here and they had this procedure done and it worked out great. And you're like, oh, wow, that's great. And then you watch another one. And then then maybe you can even chat with them, right? You put something in a chat and they say, oh yeah, give me a call sometime. I'll talk through it. It saved me a ton, but the problem is we've lost control of our medical system. And the question is, how do you take it back? Okay. And so anyway, I was watching that last night, up doing some stuff, doing some research while that was on. And I suspected I was going to probably go on and, be part of the conversation with Aaron, but he forgot to send out the link. And he kept saying no one's joining, no one's joining. And I was thinking well, I don't know. Maybe he just didn't send me the link. I don't know. And then at the end of the night, I sent him a thing. I said, you didn't even send the link out, Aaron. He's like, oh, no, I totally forgot. No wonder no one joined. But he went for 3.5 hours just pounding through it. And he's basically was taking questions and fixing the website, this OSARA on the fly, which is pretty crazy. I mean, I don't want to bore you or go on and on, but I mean, I'm finding that the amount of, the things that he says he's doing, even if he's only doing half of them, which I believe he's doing all of them, but the things if he's only doing half the things he's talking about, his productivity level is just, you can't imagine this environment that he's built around him. And the amount of work that he's knocking down right now is just incredible with this, with AI, with all these different things. And, he's really questioning a lot of things. I mean, I wish I'd recorded the phone call so I could go back and listen to it. Not very often do you feel that way. You're like, oh yeah, here are the 3 takeaways. You're like, okay, and then you might lose a few of the details of a conversation or something like that. But some conversations are so heavy, you're like, wow, I need to record that and go back and listen to this phone call, because it was just the good thing is, we can get access to him and so forth. And I'd like to do that, right? We'll talk a little bit about, again, I keep working toward the stable coin and, explaining that. And not only that, trying to figure out ways, because a lot of these people, they really know what they're doing, but, I'm right with you guys. Maybe you're even further advanced than me on some of this stuff. I've done a little bit in the digital currency, the Bitcoin, crypto. I haven't done a lot. And there's a part of me that, I feel like I need to dig in. That's the key. You always have to just get in there and dig in so far that you're committed. You can't back out. You're committed to it. And then you got to just stumble your way through it, right? Without hopefully making a bunch of big mistakes. And that's what I need to do. Because it's one thing to talk about it. It's one thing to sit there and talk about it. I don't feel prepared to talk about it because I haven't done it, so I haven't done it and I don't have a good grasp of it. And so that's why I want to get the background on it. So I understand the background on it and then start dealing with it and then start figuring out and here's the thing, you can either do it all on your own or you can find experts like Aaron. And then you can say, and then we have him as a resource and we can ask him questions, and we could, I can probably even influence a show that he does. Hey, Aaron, could we do this 2 Thursdays from now? Right. And let's do it together. And then we just open the thing up and look, he's willing to spend the time. How do you find a guy like this? I mean, he's even running for state Senate or Senate. He's running for Senate in New Hampshire, I think. You know what I mean? They want him to run for it. So, I mean, this guy's doing all this stuff. He's doing all these things, and he's potentially going to do a Senate run. You can't believe it. But you get access to someone at this level who's that smart and who knows this area I mean, his depth of knowledge is just incredible. And, we get access to someone like that. It's, you can speed up time is my point, right? We can get in there and find ways to, um, you have to have enough knowledge because you can't just go in there and ask a bunch of silly questions, right? You need to have moving in a direction, right? We're at point A. We want to try to get to somewhere out here, point B, point C, point D, something out here. How do we get there? Well, we got to ask a series of questions, go down this process, right? We can go down that thing together. So there's a window here. I don't think it's small, but it's not unlimited. And there is a privacy component to this, and there is the failure of the dollar, right, coming one way or the other, and or the fading out of the dollar over time. And so I think whether it's for us or for our children or for our grandchildren, we need to be thinking about these things because things are going to change, and stuff is going to change here. For the better, for the worse. And the only way it changes for sure for the better is if we get involved and understand it and we can influence it. If we just let this technocracy influence it, it's probably going to end up in a bad place. Okay. So let me just wrap up this economic data. Let me just blow through this really fast. So we have a key Fed meeting next week. Okay. There's talk that they could push Powell out. And actually, let me see if I have a clip on this. Let me just talk through it, and then we'll see if I can find the clip. I've so somewhat unorganized today. Could they push Powell out? Possibly. Is the Fed losing its power? I feel like the Fed continues to lose its power here. We saw yesterday Bessent having full control of the Treasury, having the full support of President Trump, even saying, I'd put you in the role of the Fed, but Bessent said, I don't want it, or he turned it down. Again, who knows what goes on behind closed doors. But we do know is that looks like he's going to take Hassett's job, National Economic Council, and the Treasury. So you can see I think it's pretty obvious what's happening here is the Federal Reserve is dissipating power, and the power is being moved to the Treasury and basically to the Treasury, back to a different, into the government, right? For better or for worse, it's moving back into the government. And because the Fed's it is the government, but it isn't the government. It has connections to the government, but it's independent, private. Okay. You can sort of feel this transition taking place, especially with Bessent there and taking over this National Economic Council. And how do you know this? Because that's how the narrative, and how will we know this? That's where the narrative will start coming out of, right? Out of Bessent, out of the Treasury, National Economic Council, and you'll hear less and less out of the Fed. Okay, that's how I think we see this transition take place. Hassett goes into the Fed. They're going to cut rates. They're going to cut rates a couple times. They're going to adjust as they need them. Who's going to drive that? Trump and Bessent. Hassett's going to fulfill it. They might use it more as an information gathering entity because Bessent also said that he wants people who are domiciled, who have connections to each branch around the country. He wants them to have a connection to that area instead of just transient people coming in and out, really not understanding the region. And that makes sense. You want to gather that information. That's really if there was a good intent out of the Fed, that was it, is spreading things around, creating these regions around the country where you can, support a drought-stricken, region or something that's been hit by a hurricane or an earthquake or something like that. You can move these flows around, and you could help remedy financial disasters that turn into financial disasters. Right? Stop the disaster from turning into a financial disaster. I think that's where I wanted to get to with that. That's what the Fed was originally intended to do, and that's what we want to see is that power transfer taking place, and will Hassett be like a big figure? Will these Fed meetings start to dissipate in power? You're still going to get them. You're still going to get it. But do we see a transition there? That's what I'm going to be watching for, right? Instead of just saying the Fed needs to go away, the Fed's terrible, the Fed's this, can it be transitioned into something better? Okay. And is that what's going to happen? Or is it going to get worse? I mean, I don't know, but I feel a sense that it's being repurposed in a good way. I hope. That's the hopeful thing. Okay, so that covers that with Hassett. The 25 basis points probably next week. This would normally be a non-farm payroll Friday. We would normally get the jobs data, but this is all part of that government shutdown. That's going to get pushed out for, I don't know. I think it's after next week, right? So I want to say like the 21st or something like that. That data comes out. So again, Fed next week, and then and then the data comes on the back of that. And you even have to wonder if this government shutdown hasn't been utilized to do some of this, right? Take away, steal some of the power out of the Federal Reserve, because I think it's done it. They don't have control of the narrative. Okay, so I think that's what I wanted to get to there. The stuff with Trump, and then let me see if I can find this. Let me see what.
Ed, the consensus is
Yeah,
that
here we
Jay
go.
Powell
This
is
is the one
considering
on the
maybe
Fed,
sticking
and
around, keeping his governor
this is
chair,
perfect.
even though his chairmanship is going to be ending next year. But you actually think that he would leave running the central bank earlier than his term ends?
Yeah, Anne-Marie, I think the real question is that once you have a selection for chair, if the president has kind of nominated someone, if the Senate approves that individual, and maybe look at kind of Steve Myron's term, it ends on January 31st. So there's going to be an open slot if it is Kevin Hassett. If the Senate has confirmed that the replacement, is that person the new chair? All of the conversations that we were having about will Trump fire Powell, one of the only ways that there was a consensus out there that you could potentially replace a chair is if the president has appointed and the Senate has confirmed a replacement. Now, Jay Powell's term would have ended earlier than May 15th if Biden hadn't delayed in renominating Powell in the first place. And so I think this is going to be the conversation that speeds up pretty quickly here is there going to be a 5-6 month lag between an appointment and a confirmation? I don't think that the Trump administration is going to be okay with that. I think there's going to be a lot of pressure on the Senate to appoint and confirm that new chairman, trying to speed this up. Jay Powell can stay as a governor. His term goes until 2026. He'd be the first chairman since Eccles to do that. I still think that there'll be some kind of desire for him to step aside at some point. But I think the real question is, when does the chair actually get confirmed by the Senate?
So let's look at who potentially is going to become the chair. Obviously, right now, all.
Okay, so we don't need to hear that. We know that Hassett, Kevin Warsh, Chris Waller, potentially Rick Reeder, right? Those are all the names. Could be a surprise. You never know, but it's probably one of those four. President Trump's been stretching this out. It was supposed to be the fall, then it was supposed to be by the end of the year, and now it sounds like they're even pushing this out into next year. So this is part of that, hype it up and then let it just dissipate. And it's like, yeah, we're going to get a new Fed chair. And then it almost doesn't matter, right? We're getting to the point where it almost doesn't matter. It went from this big deal. President Trump made a huge deal about this, right? This guy's too late, Jay, too late this, and he builds it up, and now it's just dissipating, And so he's sort of stolen the thunder out of the Fed in a lot of ways. And if he pushes this out into next year, okay, and he just has like Kevin Hassett is not a super dynamic guy. Okay. So he's not and neither was really Jay Powell in a lot of ways. But, you think back to Volcker, like Greenspan in a lot of ways was quirky. He was so quirky that he captured your attention. All of his crazy antics, and then you get Bernanke, during the crisis. He's like this total nerd science professor, and he's talking about dropping money from helicopters. So again, lots of narrative control. Trump is stealing that thunder. I think he's stealing the thunder away from these guys, and that's what we want to see. Does he push this out? Do they push this announcement out into next year? And what does Powell do? Who does Powell really work for? How did he really get appointed? Is he, again, remember, he's a Carlisle guy, ex-Carlisle guy. So is he, again, is this... I don't know. There's a lot of stuff going on. I don't want to over speculate here, but it's a fascinating thing to watch that if they let this thing trickle into next year and make it seem like it really doesn't even matter, it's going to be interesting to see if that steals some of the power out of the Fed. Okay. All right. This is a crazy one, right? We talked about this story this week about the $6.5 billion given to Michael Dell giving to this Trump. And again, this thing's fishy to me. Okay. I'm not going to go back into that today, but I did run across this clip and I have to play this. This is Michael Dell's wife. This is pretty freaky.
The strange behavior of a woman during a press conference in the Oval Office of the White House has gone viral on social media, with many asking, who is she? It's Susan Dell, the wife of billionaire and Dell CEO Michael Dell. The couple recently donated more than $6 billion to fund American children.
Now, I'm sure it's the clip's taken a little bit out of context, and I just haven't seen. I mean, Michael Dell's out. He hasn't been lately, but he has been over time on TV a lot. Tons and tons of interviews, and I've seen his wife before. I remember seeing her, but I've never seen. That's kind of a weird clip, though, and so I just wanted to run that again. Part of that whole process of, okay, here's a $6.5 billion, being given into, supposedly for these underprivileged kids, and it's watch this story unfold, right? This isn't just a one and done. I think we have to pay attention to this because this could be part of this technocracy thing that we have to keep our eyes on. Okay. And then I have this, boy, I got to get these. I won't bore you, but I loaded these things up, and today I really don't know where some of this stuff is at. So I'm just hoping these things are in a good place. After this one, I should be able to figure out where everything's at. So let's just run this one. Let me see if I can find this one, and then we'll go from here.
The numbers themselves, I don't know if they tell the whole story, but there is a bigger issue, even coming into today, about not only what the AI spend is, but who actually is benefiting from this. And I just want to know, where does HPE even fit into this conversation?
Okay, so I want to run this one. What I'm going to do is accelerate it to the end because there's some good value. Again, on the AI front, I didn't have a time to chop this thing down, but I do want to I'm going to accelerate this to the end of this clip. And boy, I can't do it while I'm talking. I want to accelerate to them because this guy's been in the middle of this stuff for a long time. And I think this is a valuable perspective. I didn't have time to chop it down, so I'm just going to have to accelerate it here. This is just on the AI front. A little bit of a diversion here, but let's run this because I think it's valuable. Let me see if I can accelerate this.
I don't know if they tell the whole story, but there is a bigger issue, even coming into today, about not only what the AI spend is, but who actually is benefiting from this. And I just want to know, where does HPE even fit into this conversation? Yes. Hardware that went along with it, and now this big build out in AI and whatever infrastructure goes along with it.
Okay, here, let's just run it from here. I think this is pretty good.
Yeah, so I was actually at a .com in between the Compaq and the AMD during .com. We were the high flyer search engine. I will tell you that the math looks a lot better here in the age of this agentic AI build out than it did in the internet. We had dark fiber that wasn't being used. We had 92% of that wasn't being used. And we can talk about, building, the end benefit of the technology versus building, the bricks and mortar. The bricks and mortar days weren't even that big, even though companies like Sun and Cisco. Right now, we've got pretty much every GPU and every XPU being used, and where AI is being implemented, real benefit that is either increasing revenue for end customers, lowering costs, or improving the stickiness with their customers. It's hard to believe that we're only 2.5 years in and seeing the benefits that we are. Because quite frankly, during the internet age, there wasn't a whole lot of meat that we were seeing 2.5 years in to the build out. We really didn't see the huge benefit until we got into the e-commerce age. That was probably 5 or 6 years after the internet first hit and that gigantic build out had started.
Okay. So that guy was on the inside, right? He's been on the inside of the whole evolution of this. And so I just thought it was an interesting perspective. I didn't know where else to insert it, but I wanted to put it in there on the AI front. Okay, so now I want to get back to this. Okay, again, on this digital currency, this is this thing called confidential layer, right? And it's an interesting little clip. I saw it last night. Aaron ran it on his show, and I thought this is a great thing to run today. It's kind of making fun of this Michael Saylor, right? The guy that we've talked about at Strategy, buying up all this Bitcoin and, professing to the crowd, how great their concept and their approach on this is. And this confidential layer does fix a privacy component of Bitcoin. So I'm questioning, and then we're going to follow this up with another one by Rebecca Patterson, who used to be a big investor. She's been all over the place, Bessemer Trust, some of the big houses on Wall Street too. But she's talking about Bitcoin. But we'll come back and I'll introduce that one. But this is this thing on this confidential layer, sort of making fun of Michael Saylor, and also talking a little bit about the privacy side of some of these coins. This is it's interesting little clip.
We have achieved something unprecedented, a unified ideology, a world built on the pure, incorruptible foundation of Bitcoin, the money of the future. It is destiny, one cause, one resolve, the Bitcoin standard. Those who resist, who cling to shadow systems and contradictory truths, shall be silenced by the unstoppable engine of adoption. The Bitcoin standard is perfect. It is the future. We will prevail.
July 2025, confidential layer went live, allowing Bitcoin and Ethereum users to bridge their coins onto a completely private by default protocol, giving power back to the people. Whether traditional finance likes it or not, Bitcoin is now private.
Okay, so that is, I think it was created by Zano. Again, this is one of these privacy platforms that pairs up nicely with the Freedom Dollar, and these are the things that I'm trying to get a grip on, because I think, again, Aaron, this is where Aaron thinks the pathway is for this stuff. Again, as we go from a a dollar as it is to through this AI revolution, okay, and we watch the unfolding of this, and we move into a digital space, it just makes sense that we're going to get a digital currency, a digital platform that's going to support that, right? The dollar's sort of getting old and archaic in a lot of ways. It needs revamped or replaced, and that's kind of what I'm talking about here, right? Is this movement to and can this dollar fail on the upside? And I saw a question in here. We'll come back and talk about that. But this is Rebecca Patterson talking about Bitcoin, and and I think what's important here is that she's worked with high net worth individuals, and I'm sure there have been times where she's been asked, or many times, many times, she's been asked by these family offices that she's worked for, very wealthy people, should I have Bitcoin in my portfolio? Okay, and it's been hard for people who don't understand it to recommend it. And so a lot of people just say, yeah, you should have 5 or 10%, right? Because it's kind of a safe number. If it goes to 0, well, you gave it a shot. No big deal. It doesn't destroy you. It's kind of the same concept with gold, right? Gold's that same thing, but gold adds different. I'm not sure that gold's doing what it's intended to do right now. We'll have to wait and see. But these things get put in portfolios for a reason. And so I think a lot of people just said, yeah, just throw some Bitcoin in there because we don't know. It could go up a lot. It could provide some protection. It could be a store of value. It could be, a digital transformation into the future. And that's that thing we were just talking about, right? That little clip, in this confidential layer, bringing back privacy to these coins, okay, this does make Bitcoin more valuable because Bitcoin had lost its privacy component. This sort of fixes that, okay? Here's Rebecca Patterson, old school, mainstream investment person, also talking about the Bitcoin.
This is still a speculative asset. When people talk about it being a storehold of value, or a diversifier, it may become that over time, but it's not that yet. So if you're going to buy it, you need to understand what you're buying it and how it's going to affect your portfolio. That's one takeaway. This is not your inflation hedge. This is not your dollar hedge. The second point I'd make is the contagion risk. So when Sam Bankman-Fried's efforts exploded, there wasn't much contagion because it was a pretty contained ecosystem. That's changing. And I think MicroStrategy is sort of the tip of the iceberg of that. January 15th, I believe, is when MSCI is going to decide if they stay in the index or not. Now, that is contagion, right? That's part of what pulled crypto down, Bitcoin down so much in the recent month or so. If they stay in MSCI, they continue to get passive investor capital. If they're taken out, they lose that support. Some of this is already discounted in the market, but it could bring you another leg of Bitcoin downside. To me, that's the thing to watch. How much are traditional financial firms getting involved in public market companies gain involved with crypto. The bigger crypto gets and the bigger this inclusion, the bigger the contagion risk that we just need to be aware of.
Well, in San Antonio, I can't remember exactly the processing center, and I won't call them out.
Trying to get these clips lined up. I apologize. Okay, so I think that's a good bridge, though, right? We've got, we've been talking about this MicroStrategy. She's talking about it. This is now becoming mainstream, right? She used to be, like I said, she used to be a private wealth manager, investment CIO of different big investment firms, Bessemer Trust and some of these others that most of us don't know the names of, but they're power players in their own right. And now she's on this Council on Foreign Relations, okay, the CFR, and this is a shady operation, right? A lot of bad globalist type actors matriculate through here, but here she is again. So that just gives you a little background on her, okay, and where she's at right now. But now she's on there talking about this and the problems with it, okay. So, and the confidential layer is actually fixing it. What's so funny to me is that these guys, a lot of these managers like her were pumping this without blindly, and now it's actually Bitcoin was getting worse and worse and worse and worse, right? It started off with a pretty good functionality, okay, and then it got worse, right? It wasn't transactable. It was expensive to transact. It lost its privacy. It really wasn't a digital for commerce. It really became, they transitioned it into the digital gold, and then it's just kept degrading. And now it's actually getting better with these solutions like confidential layer. And yet the mainstream is kind of getting more negative on it, if that makes sense. Okay. So that's, I think, the thing I really wanted to point out there. All right. Now let me see if I thought I was going to get this fixed. I want to run this one on Lloyd Blankfein. I think that this is it. Oh my gosh. Let me see if this is it. So again, in terms of, I just apologize. Sometimes you can kind of put this together and pull it off. Sometimes it becomes a mess. But these clips, I value all these clips. So I just want to try to find a way to get them all in here. This one is Lloyd Blankfein. If this is the right one, this is Lloyd Blankfein. Again, the old Goldman Sachs CEO, private risk manager. He was originally a risk manager. And then he became the president, CEO. At least he ran. I don't know what his exact title was, but he was running Goldman Sachs for a good period of time. Okay. And he talks about these contingency plans. All right. And again, not knowing what the future is, but having plans ready. And I think that this ties in with what we were just talking about there, right? We don't know where this stuff's going to go, but it's important to have these contingency plans in place. So hopefully this is the Lloyd Blankfein one. Hopefully I don't screw this up.
You'll probably find that most of the autonomous driving companies are actually losing money.
We have achieved something unprecedented, a unified ideology, a world built on the pure, incorruptible foundation of Bitcoin, the money of the future.
Okay. Here's what I'm going to do. I'm just going to reload it.
This is a new product that we just announced at the Army's conference yesterday. We've been working on it for years. It's called Eagle Eye. So this is a video feed.
Okay. I'm just going to reload this right now, and then that way I know that it's Lloyd Blankfein. Okay, here we go. Hopefully the sound is good and everything else. This is Lloyd Blankfein, hopefully connecting the dots on what we talked about there. Here we go.
How far out into the future do you think you can see?
Well, I'm in the risk management business, so I don't take it for granted that I can see behind. I don't think I can see 4 inches into the future. Yeah. I'd say that most of my...
but your firm has a reputation of being pretty good at understanding the future and being able to make some analysis as to about what risk to take.
Well, I'll confess to you that what I think we aspire to is less foresee the future and more be a great contingency planner. And sometimes you contingency plan really well and you can respond very fast to what's happening because you thought through all the possibilities. You can get off the mark so quickly it looks like you false started. It looks like you anticipated the start when all you've really done was listen so closely and knew what you were going to do that you got off the mark quickly. I think it's hard enough to predict the present. Yeah. Think about it, perspective. It's very hard to step out of your context and see what is happening. I have views about the future, but I'll tell you, we're not in the business. You wouldn't be a very good risk manager if you let what you think was going to happen have too great an influence on what you plan for and protect it against. What we really do is we really contingency plan. What might happen, what could happen.
All right. And so again, that's what, love them or hate Goldman Sachs, like Lloyd Blankfein or not, he's definitely turned into a socialite, and he runs around with like the Kushners and Jared Kushner's brother, and and these guys all know each other, so it makes it I don't like Lloyd Blankfein, okay? I'm not a fan of him. I'm not a fan of Goldman Sachs, but I think the information there is valuable, contingency plans, right? And I think it's valuable to think about that as we go from a currency that's in place now and things that are going to change, and they're probably going to change pretty quickly, okay? So that's what I'm trying to do, is come up with these contingency plans. That's the key with the Zano, with the Freedom Dollar, with understanding these things like this OSARA, right? This offshore medical tourism, where you can go someplace else, get it for 10%, 20%, 30%. These are all those contingency plans, because we talk about we talked a little bit yesterday about disasters. Could we have some sort of a false flag? Could we have some sort of an uprising? I mean, there's massive amounts of debt in the world. People want wars. President Trump's trying to dissipate those wars, from everything I can tell. But again, sooner or later, something bad can happen, just like we saw again, he can't stop it all, even if he's a totally honest, straightforward, good guy. We saw what happened with COVID. It shut the world down, right? And it created turmoil everywhere. We see logistics, supply chains, inflation went through the roof after that. We see we saw the stock market sell off, then we saw it actually go higher than ever, right? It, like pulling back a slingshot, right? They pulled it back. The Dow came back to 18,000 and then let it go. And now we're sitting at 48,000 or something in the Dow. So these are, I think, and this isn't anything revolutionary, right? To come up with contingency plans, but it's good to hear it from probably one of the best Wall Street risk managers of all time, Lloyd Blankfein, or, at least up there, right? In terms of risk managers. And, and he talks about not predicting the future. I don't know if I believe that part. I think they do a lot of prediction. But again, he can't say that, right? That doesn't fit well with all the securities. Right? I mean, he knows where to talk and where not to talk, right? I mean, these guys are well polished, and they're well-oiled machines. Okay. All right, so that gets us through that stuff. I did want to talk about this. A couple things. There was a meeting between, on the geopolitical front, there's a meeting between Vladimir Putin and Indra Modi of India. And I wanted to go through these three things real quickly, and then we have a couple more clips to run, and then we'll take a look at some charts. Okay, so here's the first one. This is Putin's India visit, and there's just a little bit to take out of this. So again, why does this matter to us? Well, President Trump's been trying to stop the war with Russia and Ukraine, and a lot of that is shutting off Russia's ability to earn money, which would be China not buying as much Russian oil, and India not buying as much Russian oil. Okay, we know that Europe still gets a lot of its energy out of Russia, even though, again, we can go round and round and round on this, right? There's so many circular references in here. They're funding Russia to fight Ukraine, but they're also funding Ukraine. So you can see they're funding both sides of this, whether they like it or not, whether it's intentional or not. It's being funded by a lot of the same people on both sides of the war in one form or another. But here's the key is President Trump's been trying to separate India from Russia in many ways, but it's really not working. And so at least it doesn't appear to be working. Okay, this is a tough one. So we have Putin's India visit is a powerful impetus for economic cooperation. All right, so here are the takeaways. The senior official praised the mutually beneficial ties between the two countries and outlined ways to further grow the partnership. Putin arrived for a 2-day state visit on Thursday. It's a 2-day visit, and was personally greeted by India's Prime Minister Modi, who broke protocol to welcome the Russian leader. So again, that gives you a sign that breaking protocol means, to me, that sticks out as, I really want to do business with you, Putin. I really want your help. Okay. And we'll see where they're going with this in just a second. The visit will include discussions on trade, defense, and space cooperation, and coincides with the India-Russian Business Forum in New Delhi on December 4th. Okay. So that's yesterday and today. And here's one of the, lead members in this whole negotiation. I believe the events of this kind and certainty to visit in the visit of the Russian president and the contacts between our country's leaders always give a powerful impetus, allowing us to implement major economic and investment projects. All right, so here's the next one. Let's go into this one. So now we have, so this is going beyond just the barrels of energy like we were talking about. So India and Russia to build a new energy playbook. India's energy demand curve continues to climb. Remember, they're one of the most populous countries in the world. We've listened to guys like Jeffrey Gunlock of Double Line talk about, he thinks India over the next 10 to 20 years is a place to be. Now, there's a lot of issues with India, but again, India's always been held out there as a huge opportunity. Okay. And so it continues to be that. It's just how much will that formalize? Anyway, back to this. India's energy demand curve continues to climb. According to recent forecasts, India will drive a significant share of global energy demand growth in the coming decade. Meanwhile, again, this is back to the population, back to how much investment is going to go into India. Okay. Meanwhile, India's electricity landscape has changed a lot because of the shift to renewable energy, mainly solar and wind. As of late 2025, India's total installed electricity capacity has surpassed 500 gigawatts, with more than 51% of that capacity coming from non-fossil. The shift towards clean power is visible in actual generation too. Over the first half of 2025, utilities produced a record 236 terawatt hours of clean electricity, largely thanks to solar and wind, plus growing output from hydro and nuclear. And that's the key, the nuclear. Russia is going to sell a lot of technology. Again, small modular reactors, rare earth mining, and I think the big thing is Russian nuclear technology going to India. Look, there's dangers to this for sure. But this is a little bit out of our control. And this is a pretty powerful arrangement. These two getting stronger and stronger isn't necessarily a good thing. One, for the war with Ukraine, but two, for the economic relations with the U.S. Okay, and then here's the last one I wanted to cover on this meeting so far. So Russia has no limits on sharing space technology with India as well. So Russia has, let's see here, the Deputy Prime Minister Denis Manturov has said during outlining several areas where the country is ready to help advance India's space program. Okay, this is another thing that Russia brings to the table that not many other countries do. I mean, they're probably one of the leaders in the space. It depends on how you look at it, right? You can look at Elon Musk and his space endeavors and all the satellites, and then you can look at, travel to the space station and so forth, and all the different research that's being done as part of this. But Russia is definitely a major player, as we've known since Sputnik, since the days of, Kennedy and, I think it was Khrushchev at the time. Anyway, this has been a big deal, and space race is significant. And India is becoming more of a player in this, all right, as well. And again, we talk. You don't know where this is going to go in the next 5 to 10 years. Musk is talking about how important space is and how they're going to put data centers up there and the cooling and the solar and getting closer to the energy sources to run a lot of this AI. So again, where this is leading, I don't know, but this is part of that contingency plan. All right, so here it says, it's no secret that we trained Indian cosmonauts, Manturov told the RT, in this area, our competence allows us to share our work, and given the privileged level of strategic cooperation with India, we have no limits in this sphere on providing the scientific and technological solutions that will allow our Indian colleagues to implement their program faster. Okay, so their own programs. Now, there's going to be a lot that comes out of this between yesterday and today. I think this is a story worth following up on next week. But this is kind of the groundwork from day one. Again, Indra Modi breaking protocol, whatever that means, to welcome Putin to India, so you got the old ties of the energy, you've got the new ties of the technology transfer. The energy that they're going to need, right? Well, you could go on forever on this one too. How far is India advancing in this AI space? We know that they're pretty technological. We also know that this H-1B visa, this whole thing's been an issue. There's a lot of things around this whole, technology around India. How technologically proficient are they? I'm sure they have a lot. I'm sure they have a lot of smart people in India, right? I know that for a fact. The question is, are they able to take those ideas and implement them? If the way my experience with India has been this, I met a lot of people from India in graduate school. They would come to the U.S. They would go to graduate school. They'd get big paying jobs because they're obviously smart, right? So they'd go and they'd work for 5 years. They'd try to make $500,000 or something like that. After cash, they'd spend nothing. They'd live in dumps, and they'd go and they'd work, and then they'd take all that back to India after 5 years, go back to their homeland, and then they would do some other venture. Okay, so that's been my experience with the mentality of India. The question is, do they not need that? Do they not need to go and extract the money from some other country like the U.S.? And this is where that H-1B visa ties in. Is something changing on that front too? All right. A lot of stuff on India, a lot of stuff to be. Let's see where these meetings lead to yesterday, today, see what the consensus is, see what the overall feel is coming out of this meeting between Putin and Indra Modi. Okay. And then two other things I wanted to cover is one other thing, since it's Agriculture Day, I had these clips. Hopefully, here we go. I'm hoping that this is the right one. This is we did this thing a couple weeks ago on on 2 Fridays ago, I think it was, on the middlemen in this beef, in the cattle ranching and beef production space, right? You got the producer, the cattle rancher, you have the meat processors, and then you have the consumer who's buying the stuff. We talked about how it went from shipping, the actual the carcasses to, the actual, like Rocky, right? When you got the beef hanging up, or the meat, that's the way it used to be done. And then they started putting this stuff in boxes, and it led to less waste and it led to more control. Okay. But here's something I thought was really fascinating when I was going through this, is that where all this stuff's coming from and how intermingled the different meat is in a product that you're going to get at the end. This is pretty crazy. Hopefully I got the right one here, but this is a pretty interesting little clip. I think it's true. I mean, again, I think it's true. It makes some sense, but this is pretty nuts, I think.
Well, in San Antonio, I can't remember exactly the processing center, and I won't call them out because it's not the smart thing to do, but they did a genetic test on some ground beef, okay? Well, they found that ground beef had over 80 sets of genetics in that ground beef. That's 80 different cows was in that batch of ground beef. It's not one cow, it was 80 different cows. What happens is that's the market access from that beef from Brazil gets spread out to the wholesale market. So Texans are eating actually beef from Brazil, Africa, other places.
Okay. So this is part of that whole thing. You turn over the logistics, the movement of this product, and you let it get in the hands of a few people, and you have no idea where this stuff's really coming from, because it's all about, one, moving product, right? If they, if, let's say Brazil, let's say they have operations in the U.S. and Brazil and different places, and they say, look, we've got a lot of cattle in Brazil, we need to move, or Argentina, we need to move that. You don't know you don't know where you're getting stuff from, right? It's all ending up in these packages, because when you would just get a slab and it would go to a butcher or a local processor, there's some control over that. You'd at least know, okay, it came from here. We've got it. We're chopping it up. We're sending it off to the local meat market or wherever else. Once you start bringing these other processors in, you have no idea where that stuff's moving about. They can freeze it, ship it, and it's all about, like, for them, I think it's about, hey, we've got a lot of stuff here. We need to move that before it goes to waste, or we can make a higher margin on this if we do this and this and this. So that's what happens when we get into this space. We lose complete control, okay? And it becomes somebody else's control mechanism. And you don't even understand, how can something like that happen? How can you 80 different genetic, outputs from that sample that they took? To me, that's mind-boggling. But that's if that's true, and it seems to be, that's pretty crazy. Even if it's half that, even if it's a fourth of that, even if it's 20 different genetic codes found in that stuff, I mean, that's still pretty crazy. 80's insane. All right. Okay, so let's take a look at a couple charts here. I wanted to look at this. We've got, let's take a look at this dollar. The dollar's kind of hanging by a thread still here. We've got this harmonic structure. Longer term, we go through this all the time, and we look at this. Let me see if it's this one. Okay. Boy, that one's messy. Let me see if I have something that's a little cleaner. Yeah, let's just look at this. So we've got the dollar. Longer term trend on the monthly chart, it still looks good, right? There's no sign of a breaking of the trend, okay? But we are nestled down in here, okay, at the apex of this triangle. The question is this trend going to hold? Could it blow through there? It could. 95 is the level, right? In my mind, 95 is that level, okay? Technically, it's done what it's needed to do. It's taking a break. I would love to see this thing. I would love to see this harmonic structure, it's doing, it's doing what it needs to do. I don't like it because it doesn't feel good to me because I have positions on and they don't feel great. But the point is, we get the breakout signal here where the purple circle's at. We get the harmonic structure. We go above a little bit, up to the 1/8, down to a little below the 1/8, probably down to the 2/8, back up, back down again. And this is good, right? It's going around the breakout zone. It's building energy. The question is, as it builds energy, right now it's below the pink shaded zone. So it's a little, it's concerning. Okay. It just continues to toy around with this. It broke these prior lows of this back in here. I've got this purple line going across here just to kind of find some, again, when you're sweating it and things aren't going your way, you're looking for these little things to find points to manage the risk against. And so below this purple line, I start to not like this trade. Okay. And it's sitting right on that level. I would love to see it have a strong day, sometime either today or next week, where the dollar can actually push back up into that breakout zone. That would give me some relief, some comfort, that this thing's, a little bit, it's recovering a little bit. It's doing more of what it needs to do. Right now, it's done what it's needed to do. It's building energy. The problem is energy for what? Okay, energy for a move down or energy for a move up. And again, managing the risk, trying to say if it gets below this purple line, which is at like 98.77. So basically we're hanging right there, 99. It's still a pretty strong move. You can see, over this chart back in here, we've got a low here on September 16th, mid-September back in here. Ever since mid-September, it's been in a nice uptrend. That's what we were talking about. The technicals, we were looking at technicals before we had the harmonic structure. We get the harmonic structure. It feels like a blessing. And it is, but it hasn't been yet, okay? And maybe it ends up not being one if the dollar's going to actually fall apart here. But the key is to know where you're wrong. If this thing starts to break down, then I'm potentially, at least for the short term, wrong on this dollar, and maybe longer term, right? It could, again, contingency plans. What if this doesn't work out? Then what is my plan? How am I going to exit this trade if it doesn't work out? It's hanging by a thread here. It would be really comforting to see it move back up into that pink breakout zone. And then we'd see other markets start to make some moves. All right, let's take a look at, I want to look at this British pound real quickly because it ties in with this. And this is one of the ones that I'm watching. This would have been great. Hopefully you can see this. There's a couple of old structures on here, but here's one of the things it's not really that pretty, but let me show you what I'm looking at. Okay, so this upward sloping trend channel, right? Market comes down. The trend back in here, okay, was good. We had a structure, a harmonic structure, pushed down into the green line, the bright green line. So this is old residual stuff. Got down below, came back up and retested, okay, right here. And then we start forming this upward sloping trend channel, okay, thinking that we can sell against this, buy back down in here, right? That concept. If there's going to be another move down, we want to use this trend channel to sell some, buy some, sell some, buy some, with the idea that this British pound can go down, because if the dollar goes up, the British pound's going to come down. Well, we saw on that last chart, the dollar's hanging by a thread. It's below the breakout zone. And sure enough, look what the British pound is doing too. It broke outside this trend channel right there. Okay. So that's not a good sign either. All right. These are the things that are concerning. Okay. And then let me look at this thing. Let's take a look at this Swiss franc. Let me go. Here we go. So this is the Swiss franc. We also have a harmonic structure on this. And so I keep trying to build a position in this thing. And remember, right in here is where the dollar got its signal. Okay. That same purple dot, right? Swiss franc got messy, broke out right away, didn't trade across the breakout zone at all. And I was like, this is going to get messy, and it did. And now the Swiss franc rips all the way to the upside. I think it went to the upside 5/8 or 6/8, something like that. Back down through the breakout zone, and now it's starting to find a little footing around it again. Okay, so this thing hasn't been worth anything yet, really, other than the fact that when you see it break out like that, you're like, this is going to get messy. So with that in mind, you can try to take advantage of some of the messiness that occurs, like trying to sell it up somewhere in this range, right? You're not going to pick the top, or if you are, you're lucky, right? Or you've got just happen to get lucky with a great setup. You might get some divergence up in there on a shorter time frame. You might be able to look at prior levels. You might get lucky and be able to, get a nice sell up in this area. But even if you found something up in that area, right, and you were able to just survive, because this is survival mode right now in the Swiss franc, I think this thing has massive potential, and I'm not surprised that if we're going to get a big move, that this thing's going to shake pretty hard, right? It's going to shake people as loose as it possibly can. It's a lot of times what markets do before big moves. This energy's been building the Swiss franc for 7 years, okay? The Swiss franc to the dollar's been down to the Swiss franc since 1970, pretty much, with a couple blips on the upside. It's been pounded. Is something changing, right, with this whole global situation? Is the power that once was, that flowed through Switzerland, through the Bank of International Settlements, through all the Swiss banking, is something changing? Again, that's the question I keep asking. This is the place where it would show up. So when we see this volatility, it doesn't feel good, right? I would love to have much more basis around this harmonic structure, but it just hasn't been pretty. Now, is it getting a little bit better? It's starting to get a little bit better in here, okay? And that's why I still hold on hope with this dollar, because I thought this is great. We got Swiss franc, we got the dollar. This feels really good. This is what I've been looking for. This fits, right? This fits my plan. And now, like Lloyd Blankfein said, you have to have contingency plans. So that's where we're at. We're in contingency plan mode. It still hasn't broken. The Swiss franc could still go down here, right? And it could make a significant move. And and if it does, we're going to have these harmonic structures, right? What we would be looking for, what I would be looking for on this. And again, this applies to, hopefully this is valuable in the sense that, hopefully this is valuable walking through this, right? Because this is a struggle right now, right? It's been a struggle for 2 or 3 weeks on this trade. What I'd be looking for is this, it hasn't responded that well to the harmonic structure, okay? Not like we would like. It has responded to the levels, and I could go through and make a case for it, but it's futile, right? It doesn't really matter. What will matter is if it starts to live below this pink breakout zone and it makes its way into the halfway, right? And it has a response here. We would want to see some kind of response where it's like, okay, it's back on track with this harmonic structure, right? It's back in here at this 123.26. That's what I'd be looking for. And then what we'll look for is the full downside, which would be, let me just mark that. I don't have it on here, but so we'd be looking at this to this and then this down to here. So we'd be looking at something like that. Okay, so what I would be looking for, again, contingency plans, does it respond to that big first oval, that oval at the halfway, the dark green line, and does it respond to the full downside objective, okay? Does it respond to those levels? It hasn't been pretty so far. Does it clean itself up, okay? Sometimes messiness leads to cleanliness, and that's what we're looking for here. Markets breathe in, markets breathe out, they get... And that's what we're looking for, is some form of order to this market. Right now, there is order, and you could make a case for it, but it doesn't matter. It doesn't matter because it hasn't been pushing this forward. That's what we want to see. Reactions to these two levels. And if we get that, then we can get confidence that something bigger is going on in this. So again, just waiting and watching, trying to stay alive, trying to hang in there, trying to see what we can get out of this market, right? Is there something coming? Because if it breaks below that bright green line at the bottom, okay, we could have something underway, right? And the more messy this is going in, actually, the more clean it can be coming out the other side, okay? So when we get on the other side of that bright green line, it could get really clean and we could see significant movement, all right? And what could bring this on? There's a lot of different things. The dollar going higher, of course. The failure of the dollar on the upside, right? Moving to some digital currency, stable coin, for better or for worse. The other thing that's going on here is that Japan is not the carry trade that it was since 1990. So we've had this carry trade. The world has had this carry trade where they could go to Japan, get cheap money, come back, do whatever they want with it around the world. The place to go right now is Switzerland, right? It's at 0%, potentially going to negative interest rates. That's the place to go and sell the Swiss franc, pick up money, debt, cheap, get free or less than free, money, and take it and use it around the world. Okay, will the Swiss franc become the whipping boy that Japan has been for 35 years, since the late 1980s? Okay, this kind of connects us back to President Trump saying Japan took advantage of us for all these years. That needs to come to an end. Has Switzerland taken advantage of us in many ways? Remember, there was a trade deal with Switzerland that they came to town to meet with President Trump, and he wouldn't even meet with them, right? They just came to town and met with, this has been probably 6 weeks ago, I would say. He met with 3 levels down. Switzerland didn't get access to any of the top administration. So that's the exact opposite of what we're seeing with India, with Putin and Modi, right? Modi comes out, breaks protocol to meet with Putin. He's interested in making deals with Putin. Switzerland came to the U.S. to create a trade deal, and nobody showed up, right? That's the exact opposite, okay? So what's going on in these little dynamics of this stuff? So again, you're trying to sort this stuff out, right? We have this harmonic structure. It hasn't been pretty. This hasn't been easy. The dollar's hanging by a thread. The British pound doesn't look great. The Swiss franc, it hasn't been fun. And it's been tough trading. And you just have to sit through it. I mean, I've still been able to eke it out, and I think I'm, profitable on it, but it hasn't been fun. It has not been. And I know there's, other people that are participating in this trade, and it hasn't been fun either, especially if you can't maneuver very well. So the takeaway on this is, if this Swiss franc starts to break down, that's going to give a little bit of buoyancy to this dollar, okay, or vice versa. It could be either way, right? The dollar going up is going to help push the Swiss franc down, would push the British pound down, push down some of these other currencies. And the one thing I want to say is that these currencies are so stacked up on one side that there's so much energy built up in all these currencies. If something starts to unravel, it's going to really go, okay? And is that where we're at? I don't know, but we'll wait and see. Okay, we want to look at this gold. Let me just pull this thing up. I think we're good on this. Let me see if I've got it ready. Yeah. Let's take a look at this. So the gold, I want to show this just because this is, again, another, idea that hopefully this is silver. Let me go to this one. Okay, here we go. I hope this is the right one here. That looks terrible. Why is that not coming through? Do we roll contracts again? Boy, that's not good. Let's see here. I have no idea why that's not working. Well, maybe we can't look at that one today. Yeah, it's not even filling in. I don't know if the thing is just, I don't know what the problem there is. I don't think I have it here. Let's see. Yep, that's the one I really wanted to show right there. And for some reason, it's not populating. Let me try this. Let me just try putting the symbol in there again. See if that'll kind of wake the thing up. No, it's gone. I don't know what the problem is. GCE. I'm sure I'm going to lose all my work on it now. It'll just clear it all off there. Yeah, I'm not sure what the problem is there. Okay, I don't know. I'm not sure on that one. Boy, it's a great day. And what else did we want to look at? The dollar, gold, soybeans. And see if there's anything else in here. So good morning to everybody. Let's see. Happy Fridays for sure. Hopefully it's a happy Friday. David Rocket says McClellan oscillator is very bullish. Oh, yeah, I do want to look at this Russell, too. Let's look at this Russell. And then Rachel, okay, I can see we have to work on. Yeah, well, a lot of this isn't your problem, Rachel. This is just mine. But yeah, we can work on some stuff for sure. Yay, labels. Okay, sorry, Trumpet. Not that many are labeled, but some of them. Dollars like Bon Jovi's song, Living on a Prayer. That's about exactly right. But if this thing gets going, TZ, I think this thing can really go. And you know that, right? You've been watching Brent Johnson and so forth, so I know you're aware of that. Okay. Just why Costco is suing Trump for tariffs added on Biden's Secretary of Commerce to their board. Yeah, that doesn't surprise me. American Contingency is a good group. Okay, so I think that's the stuff. All right, let me look at this. I don't know what happened to our gold chart. I think the big takeaway is this, that I really wanted to show this, and I'll see if I can't generate it for next week. We hit the apex of this triangle, okay, and it stayed above it, and now it's just absolutely riding that thing almost perfectly. If you think of the crude oil chart that we look at, it's almost the exact opposite of that, right? Crude oil got below the apex, and it's just riding the other part of that trend channel down, okay? Same thing that's going on with this gold, right? It got, I thought there was a chance it could break through there, that we could see the 3,500. It doesn't look, given the structures that we have so far, it doesn't look like that's in the cards at the moment. Now, that can change, but right now it doesn't look like that's in the cards. Could happen early next year, could happen sometime, sure. But the structure that I was looking at, this triangle, isn't giving us that indication that that's what's going to happen based off this structure. Can something change? Sure. So, but I really wanted to show it because you can see what it did, once my idea didn't work, and we were like, look, let's see what it does when it gets to the apex. If it stays above, the trend is up. Well, that's what happened. I was hoping for a sell-off because then people could pick it up cheap. Instead of paying these high prices for it, you get a chance where everybody flushes it out. And now it's more reality, right? You get it at 3,500. That's what I was hoping for. You don't always get what you hope for. But the point is, I wanted to show how it's riding that trend channel, how it's riding the after the apex, it just keeps riding the trend line off that comes off of that trend, that triangle. Okay, let's take a look at this Russell because it's hitting new highs. And let me see here. I wanted to show you this one here. Okay, this is that the daily? That's not the daily. Man, what a struggle today. Okay, all right, maybe this will work. Okay, this isn't what I wanted, but it will probably work. This is probably the one we wanted. All right. So again, we hit the high back in here. Okay, we hit the high again. All right, we hit another high. So this is 2021, January of 2021. This is November of 2021. This is November of 2024. And then we just broke through in here, which is probably like August of 25. So late summer, we broke through. Came back, we retested it. Let me blow this up so you can see it. Okay. So this gives you a little bit more. We hit this level again, this 2381, something like that. And 2,381 in this Russell 2000 index. Again, small cap, mid cap stock. This is the index that measures that probably as well as anything else. There's also some mid cap indexes, but this is probably the most active still. The Russell used to be great. Then it sort of got destroyed. I think it got shifted on exchanges, and then the thing lost its volume and it wasn't very good. And then somehow it's been revitalized. This is probably back to being the best index for small to mid cap stocks. Okay. Anyway, the point is it gets up to this level in here, right? Late 2024. We had the Dow set up, right? Then we had Liberation Day, right? We get the tariffs, we get President Trump, the Trump policy with tariffs, and we get the breakdown. Okay, so just like all other indices, this one got hammered too. Okay, maybe more than the others, but since this low, it's up 30%. Okay, and here's the thing: it doesn't look that pretty, right? I mean, there's nothing that's. If you look at, it's up 30% off this low back in here, off Liberation Day, back in April. And this chart doesn't really look like it's done anything yet. So this is what I was talking about. If money's going to go from the technology, if it needs to move, it doesn't mean that they can't continue to move forward on AI. They just may not get the stock appreciation, right? NVIDIA may not go up 40% every, 6 months or something like that. Okay. The money may go into other things, and it could be the small cap sector. All right. And so we're seeing this. We saw the retest, and this is what I was watching for, right? Comes back down, We see it retest this purple line right here at 23, I don't know, 61 or something, 23.45, 23.50, let's just call it. And now it's bouncing. And this is on a weekly time frame. So let's look at the daily. That'll give us a little more detail. So this is that retest right around in here. Okay. And now it's moving and it's pushing on to all-time highs. Okay. If it's not, I think some indices of the futures market's not at all-time highs, but it's looking like it could get there. Okay. And then we could look at this on a shorter time frame, although I'm not sure that's all that helpful. That's not even the right one. Let's look at this. Okay, so it's sitting right at these all-time highs. As we go into this weekend, here's a couple prior highs back in here. Again, this is like, October. This was that big push up, October of 2024. And is it really picking that up? No, this is October of 25, right? So we've got the double top up in here. We get a sell-off. Okay, we were looking at other markets then. Could this goes back to the Dow coming back down to, hit the 47,797, came down, rallied back up to the 47,797. We looked at that yesterday, right? Both the December and the March contract are above their levels. So the Dow looks pretty good on the current contract month and the March 2026 contract month. The S&P was above on the March, but not above on the December yesterday. So it's sort of straddling the fence. The Russell is pressing on all-time highs back into this October timeframe. Okay, before this, this little sell-off occurred here. And there might be a trend channel we can put on this. Let me see if there's anything that kind of lines up. You can kind of throw this on there. You can see that trend channel, it's coming down. Once it breaks that right up in here, okay, it starts to tell you, like this whole break right up in here, it starts to tell you something's different, okay? That little break in there, something's different, okay? And then it moves above the moving average without any problem. And then now it's pressing on all-time highs. So can this Russell take the lead, okay? Can the small and mid-cap stuff? And this is encouraging, right? This means that some of the policy that Scott Bessent, President Trump, even Howard Lutnick, right? All the things that they're putting out there. This market's anticipating what they're saying could be true going into 2026, and we could get a rally. Now, wouldn't it be interesting if the S&P couldn't really move that much, or maybe the NASDAQ goes sideways to down, and the Russell's the one that starts to outperform. Again, this Russell's a lot like gold in the sense that it doesn't have massive market cap, okay? So when money moves out of these other things that are big, like $80 trillion stock market, big, massive places, and now it's got to move into a $10 or $12 trillion gold market, a little bit coming out of one can make big impact on the other one, right? And these how these things balance out over time. Same thing with this Russell and the small cap, okay? I don't even think they have enough stocks to fill the 2,000 slot. So it's called the Russell 2000s because it's supposed to have 2,000 stocks in it. I don't even think they have enough stocks to fill it. It might be like the Russell 1850 or something. In reality, it's not even the Russell 2000, I don't think. At least it was that way at some point in time. Probably need to look into that. The point is that if money starts to flow into this, then it can move, right? It can move because a little bit of money out of one big place into this little tiny sector, this little tiny space of small and mid-cap stocks, it can really move. So we could see outsized gains in this. It's the same reason that some of these emerging markets go. They're small market cap. When money needs to go find a home that's cheap, it's like, hey, this is cheap. We think the backdrop's good. Let's pile into these emerging markets. You'll see 30, 40, 50% runs in these emerging markets. And then 2 years later, they've been crushed 100%, right? Or not, sometimes 100. Sometimes it just blows up. But anyway, you see massive, massive sell-off. So that's the thing. When big money flows from big places, big asset classes into smaller asset classes, you can see these outsized performances. So that's what we're watching for in this Russell. And the nice thing about this is we have this... nice thing about it is we have this, the prior highs, it's probably better on this one. We can look at this one right here. This 2350 area is a place to manage the risk. If it starts to break back down below this area, this purple, then we've got some problems with it, right? That's a place to manage the risk against. So I'm going to try to trade the heck out of this Russell on the upside. It might become my preferred index to trade. Let the Dow go, maybe occasionally trade it if there's a setup. Let the S&P go, maybe trade it if there's a setup. The NASDAQ, Probably not try to trade it, only if there's a really great setup. But the Russell would be the place where I might start looking if this pattern continues. Okay, and then one quick look at soybeans. Let's take a look at this. Okay, so again, we talked about this. This was the big deal going into all the the whole Asian trip and everything else. Could soybeans make their move up into that that black moving average? We had a harmonic structure in this. I think, that's sort of played out. But again, we can use this breakout zone, those pink lines, as a base, and look where it's lining up. These two are coming together. Okay, so we're seeing this stuff kind of becoming a point of confluence, right? As we see this kind of come into there. All right. So out in here, out in this range, there's a lot, there will be forming a lot of support for this soybeans. If it starts to break that, that everything's yellow on here, so I don't want to, but that yellow box, there's going to be a lot of support out in here, right? We have the harmonic structure, we have a longer term moving average, we have this green moving average coming up. Okay, so we have these things coming together. There's support down in there. So a pullback into that area for soybeans would probably be a long-term buy. So could that happen in December, January, February, or early the planting season next year? Remember, Scott Bessent yesterday was talking about when he was questioned about the soybeans. The Chinese haven't been buying as much. He's like, yeah, but give them till the end of the planting season, right? They've got a target date, and that's what he was waiting for. So the soybeans is one to watch. How are things going with China? Are they actually going to be forced to follow through on purchasing U.S. soybeans and not being able to go wherever they want? And if that happens, remember, it removes some of their power and control over where they were getting their soybeans before, which is in South America. Okay, so again, part of this whole power shift. All right, so this show's been a train wreck. I mean, not much technology worked, and I didn't have the clips lined up and so forth. Hopefully, it was still valuable to all of you in terms of the concepts, right? Lloyd Blankfein, contingency plans, the cryptocurrency, the Bitcoin, right? Like with this confidential layer, it actually makes it a little bit better than what it was. And yet a lot of the people are running from it. Okay. I just still don't like it. I mean, I did. I've had some at points in time, but I don't now. And so the key is, I don't think I would go back into it. I just don't like its investment. I'd be looking at other things, right? Even though it's gotten better, right? It's better today with the confidential layer than it was 6 weeks ago before that came out, okay? But yet, we're going to have to watch and see how it plays out, And again, we've got levels, 70 to 75,000 on the downside. That would be a key area, 100,000 on the upside. So you're really looking at that 75 to 100,000 range. Above 100, it's probably free to run again. Below 75, it's got major problems. And in the meantime, it's a trading range, 75 to 100 now, okay? Two big psychological levels and technical levels, and the big levels that go back to that Michael Saylor strategy, right? We know he's got an average price supposedly at 77. That would put pressure under them. They don't think they're under pressure. We saw the CEO yesterday talking about that. He thinks they've got time on their side. I'm not so sure the market looks at it the same way, though. So, all right, with that, have a blessed weekend, everyone. That was Commodity Friday and stuff. And so we'll be back on Monday to look at currency. We'll see what this dollar does. Let's see how things close up this week. Let's see if this British pound has a little bit of pressure on it. Watching these things, because most people aren't going to trade the dollar. Most people aren't going to trade the currencies, but this dollar movement will have a big impact on almost everything, right? It will have an impact on flows around the world. And so getting it right gives us what the tailwind is. It's a big deal. And then that's why currencies, and we look at debt, and then we can look at energy and things like that, and then we can look at equities, and then we can look at commodities, right? And commodities, and then you come full circle, right? The dollar has a big impact on commodities. So hopefully, theoretically, each day of the week sort of, is valuable in lots of different ways, and it forces us to look at all this stuff. So from a macro standpoint, and I've got a lot of work to do on the harmonic stuff this weekend. I didn't even upload this week's stuff. I've just been so busy. I haven't even kept up with the model for this week. So I need to do a lot of work to get caught up on that. And with that, have a blessed weekend, everyone. Thank you. And we'll see you on Monday.
was gone. There was no train station. There was no downtown. Somehow it disappeared. All my favorite places. My city had been pulled down, reduced to